Top three things in my notebook. Number one, the VIX. Number two, commodities. And number three, the 10-year bond yield. So look at it for what it is. The VIX tested and tried our trend line of 1491 and held. Now there's no resistance to 20.4 on the VIX, and the VIX obviously closed at 1735. You can drive a truck through the risk range in the VIX, and that, just FYI, is not a good thing for equities being. Again, so watch that in the face of the S&P 500, of course, breaking our key trend line of support, which is 1779. And no, I don't think you buy the green arrows out there in the futures today. Second thing, commodities. Look at commodities. Again, inflation accelerating. Inflation accelerating. Commodities, inflation. Inflation accelerating. Commodities, CRB index, 19 commodities in the index, up 0.8% yesterday, with the S&P down a full 100 basis points. Huge divergence there. Inflation accelerating to 1.7% on the CRB index, with the S&P down 4%. That is just classic. Again, it's playbook Hedgeye. You don't want to be long equities in the face of that switch. And again, that's why being long commodities has been the right inflation call to make. Now, finally, the 10-year bond yield, of course, does not like growth slowing. So it went to our trend line yesterday of 280 and failed. And it failed hard. So again, look at it for what it is. 2.67% is now support on the downside. That's an immediate term trade line of support. And there's really no support below that to the long-term tail line of support for the 10-year bond yield, which is 2.51%. If 2.51% is broached to the downside, I mean, the bond bulls will definitely be back, and they probably should be. So those are your top three things.